Today we are taking a look at another exciting lithium stock. That stock is on the ASX by the ticker of LKE. Their name is Lake Resources, and today we're going to be providing a fundamental overview of the company as well as providing some technical analysis in order to make some predictions as to where we can expect to see LKE go in the near future. Let's get into it. I've partnered with Crypto.com to provide my viewers with an awesome opportunity to accelerate their crypto journey. Crypto.com is used by over 50 million users in 90 countries across the globe and is a leading platform for buying, selling and staking crypto. They also offer metal Visa cards with a huge range of rewards that allow you to convert and withdraw your crypto in fiat currency. Crypto.com is offering a $25 sign-up reward using my affiliate link in the description or by entering affiliate code RyanProven. How's it going, guys, and welcome back to another lithium stock analysis video. And as I mentioned, today we're taking a look at Lake Resources. They're on the ASX, they're an Australian company and their ticker is LKE. This is another very exciting lithium developer. Roughly at the time of recording this video, they are worth $1.4 billion and their main operations are based in Argentina. The Kachi project is really the exciting one there and the main focus of today's video. This is their flagship project where they're hoping to start up a lithium carbonate facility and start supplying the huge amounts of demand in the lithium market. So without further ado, let's jump into it and have a look at the company. The Kachi project is located in the infamous Lithium Triangle where many of the world's biggest producers of lithium carbonate and of course lithium brine operations are located. They've currently performed a PFS for the Kachi project and it is for 25,500 tons per annum at a value roughly of $15,500 per ton. So you can already see this is going to be a very exciting project based off the PFS alone. The IRR post-tax is 35%, so we're talking some pretty enticing numbers here. Now there is a DFS that is going to be completed as well. The DFS is for up to 50,000 tons per annum of lithium carbonate equivalent, and that is due to land in Q3, Q4 of 2022. Right now, probably the most exciting thing going on is their demonstration plant, where they're basically taking some of the lithium from their Kachi location and they'll be starting to put it into sample batteries as well as sending it out to offtake partners for them to test. Now obviously right now as well they're looking into financing and they're scheduling construction and production for 2023/2024. Of course, production up to 50,000 tons per annum is expected in the 2024 year. Now let's talk about some offtake agreements and some direct investment. So most notably 6th of October, which is the time of recording right now, they have just signed up an agreement with WMC Energy to execute a conditional framework agreement. And this is an offtake for 25,000 tons per annum of battery grade lithium. That's the important part. Lake is expected to be producing battery grade lithium, which is very critical. Other offtake partners are also very interesting. To kick things off, they have a non-binding MOU signed with Ford. Now obviously non-binding, but we know Ford is going around to many other players. They also have a non-binding MOU with a Japanese trading house which is known as Hanwha, and they are also actively in discussions with other potential offtake partners as well. Interestingly enough, they also have a partnership with a company called Lilac, which allows them to earn up to a 25% stake in Lake, and that would result in basically a contribution of $50 million US to the Kachi project once that earn-in has been completed. Now, Lake do have a few other projects as well located within the Lithium Triangle in Argentina. Those are the Kokori, the Olaroz and the Peso projects, and their target is by 2030 to produce 100 tons per annum of lithium. Now, these are in very early drilling phases, so obviously test work is being conducted, so they are very far off, but the Kachi project will be coming online first, and of course if this is profitable, it could help to develop these projects and of course expand Lake into the future. As you can see, LKE is a very exciting lithium stock, but one thing to note is right now I don't believe they have a managing director in place, so they're looking for someone to fill that role. So hopefully within the coming weeks or months, keep your eyes peeled and there'll be an announcement on that. But let's now take a look at the charts, perform some technical analysis and make some predictions on where we can expect to see LKE go in the near future. Let's take a look. Welcome into Lake Resources LKE chart, guys. As you can see right now, we have closed today at $1.0150, right basically smack bang on that 20-day moving average, just sitting slightly higher at $1.02. Now, right now, I think we are in a bit of a downwards trending sort of channel pattern. There was an attempted break up here. Unfortunately, it was unsuccessful and it coincided realistically with the overall market taking a little bit of a downturn. So as a result, we are still sitting within this channel all the way down from the all-time high of this stock, which was back on the 5th of April in 2022, a value of $2.65. So like many of these lithium developers, they do ramp up really quick and then take a bit of a hit just due to the fact that there has been a lot of momentum. Now, you could suggest what we are seeing at this point in time is a bit of a cup and handle initially, but I would have said the breakout of this handle would have been just there, and unfortunately the handle is now too long. So that is not anymore in play at this point in time. Looking at the moving averages to start off with, the 20 days just crossed below the 50-day moving average. Not a good sign. It's an indicator of a short-term downtrend, but they are still close, and there is the possibility that if we obviously break through the top end of this resistance point, right now sitting smack bang on the $1.09 mark, we could see a reversal in that and the 20-day move back above the 50-day. But at this point in time, every single one of our moving averages are acting as major points of resistance for us. From a volume perspective, probably the most positive thing to note is we're not seeing big spikes when we are on those red days. We are seeing more spikes when it does come to, I suppose, a bit of buying action occurring, as you can see in these previous examples coinciding right there. All in all, off face value, things aren't looking too bad, and I'd suggest at this point in time though, unless we see another test of the top end of this chart, we will probably see a little bit of a drop if we do drop below our horizontal point of support, which I'm going to put right in place there. It is sitting at the 87-cent mark. You can see plenty of tests of this point. It's been a major point of price action for breakouts and breakdowns historically. So I think within the next few weeks we will start to see something occur, either a big break up or a big breakdown, as we are getting to the pointy end of that pattern. A breakdown would likely get us to see, of course, the bottom end of our channel, a break up, and hopefully I'd suggest we would be immediately targeting that 200-day moving average, right now sitting at $1.20. Let's take a look at a few more indicators as well. Firstly, the RSI, sitting smack bang in the middle right now at 48.72. Plenty of room for us to break upwards or downwards at this point in time, so nothing too interesting here. Probably only thing to note is we are above the yellow line, as you can see, which is positive, and that is starting to swoop up to indicate there is a change in the momentum from selling to buying. So that is really positive. MACD is the next indicator we will take a look at. And this is where things, in my opinion, do get exciting. The 12-day EMA has just crossed above the 26-day EMA. Now, if we can break similar to like we did over here and start seeing some buying volume come in, we should have a nice good green period similar to this. But last time we saw a cross, it was very shallow, and given this is early days, that is still a possibility at this point in time, given the fact that the volume hasn't really come through as of yet. But all things considered, we are seeing, as I mentioned, the RSI start to flick up slightly, showing buyers coming in, and we have seen the cross already occur. And unlike last time, we have had a bit of a bigger green bar appear here than we had over here, which was relatively flat in the scheme of things. So this is one you will really want to keep your eye on. And what you want to be looking for is that 12-day EMA moving further away from the 26-day EMA as opposed to moving sideways, or if a sell-off comes downwards. The other thing I really want to point out is the Fibonacci pattern that we have in place. So we're going to take our bottom point here at 54. We're going to then go all the way to the top of our last little run, which is sitting right up here, as you can see, at $1.59.5. And this should give us a bit of a clearer view as to some of the Fibonacci points of support and resistance. So right now, the key point that we're struggling with is 0.5, and that is $1.06.5. That is causing us a bit of grief. Right smack bang on the top end of our downtrend and just below where the 50-day moving average point of resistance is right now. Ideally, this is the first target that we need to hit and break through. That could happen very quickly with some momentum coming into play if the MACD does manage to hold up. The target, therefore, is that 200-day moving average, which is almost correlating to the 0.382 mark on the Fibonacci sequence. So as you can see here, these factors are lining up relatively well at this point in time. Now, interestingly enough, from a support perspective, we have 94 cents before we do come down to that 87-cent mark if the pattern continues to play to the very end down here. So I would not be shocked to see a movement similar to this occur where, you know, we've had our test up here and we start moving down, a possible bounce and then another test and a possible breakout, and then if that fails, we then will see that downwards movement come in and we will go down to the horizontal point of support, which is sitting at 87 cents. All in all, what do I think is going to occur? Well, from a short-term perspective, I do genuinely think we will move down to that 94.5 cent mark. That is the point of criticality though. And if we do hit that point, we really need to see that bounce occur. And you can see plenty of price action has been at that point historically, so it's a good point of support for us. Ideally though, what we want to see is this top end breached and then target immediately the 0.382/ the 200-day moving average as a key price target in the medium term. That wraps up today's analysis of Lake Resources, ticker LKE on the ASX. I'd love to hear your thoughts down in the comments section below. And of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.